Hello guys, welcome to a Trading Parrot. Bitcoin started the month of December with a little bit of a puke and with a virgin month. We need to cover that as well with what's going on with the rate cuts, with the Bank of Japan potentially raising interest, while at the same time the Federal Reserve cut rates, some patterns, silver putting new all-time high, MicroStrategy becoming the elephant in the room, or is it really? In my opinion, it's always been the elephant in the room. We'll cover the 4-hour daily. We'll see how things are going very quickly and then jump into what really matters, which is what's driving Bitcoin to the downside. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. You're looking for an exchange to trade, Tubi, it's a great option. In 2 minutes, you get funded with crypto. You don't need any KYC, and you can get access not just to leverage, but to all the different altcoins. $50 to trade for free and 200,000 USDT that you can claim if you use the link in the description. As I mentioned this morning, the CME gap that everyone is referring in here is invalid. It is not a CME gap because we started the price opening the markets of CME right from the price where we close on Friday. So technically there is no gap. I strongly encourage you to watch the video of Red December. It's a half an hour pack with loads of alpha around Bitcoin, specifically for starting the month, starting the week, ending the year, and loads of things that you cannot afford to miss. That's why this video is going to be slightly more lean towards the short term with the 4-hour and daily progress of the day, and then we're going to jump into what is actually driving the forces to push Bitcoin to the downside and some other things that also matter for anyone trading Bitcoin. So yeah, we started the week, we started the month with a puke in here, with a fake out from this W pattern, which I was hoping to get form, and then it fake us out into the downside. If you look at this from the distance, you can see that we have reached peak 1 in October, second peak of the 4-hour is on the 27th of October, then we reach the same peak on the 10th of November, slightly below, and then we produce a fake out. This is definitely a fake out. We have been pushed back down into the bottom of the range at 23, similar to the same levels that we have since around end of October. And if you focus on this line in here, you can see that since June in 2025, the 4-hour time frame has never reset the global support. It has never pinched this yellow line of global support in a similar way to what the daily has already done. Remember, this line was placed like that. Today I'm going to explain why I'm moving it lower, but let's finish with the 4-hour first. Point is, 4-hour hasn't reset. How will it look like if the 4-hour was to reset during this week? After all, we cannot get a carry trade 2 coming in from Japan potentially. So let's put the patch before we get the wound. And that is currently trading at 79.7K. That yellow line in there coincides with the 1617 RSI on the 4-hour. Notice that in order to pinch that level, that means that we need to go slightly lower, and that tempted me to place a Fibonacci retracement from the highs of 108 into the lows of 80K, back into the swing high, and it's giving us an extension of 0.5 around 79,600 and a 0.618 at 76. Just being conservative in the target in case we had an equal low and we started resuming to the upside. Of course, most traders wouldn't focus on these levels. Most traders will be looking into the 1 to what's 1618. An extension of 1 gives you a whopping 66, and a golden pocket gets you a 49K. Sorry, I cannot breathe anymore suddenly. Of course, that is way beyond just resetting the 4-hour. Let's go into the daily and let's see what is the current damage that has happened today. So far, we haven't taken the low of the 80K.500. We are bouncing from this green line that, in my opinion, is no longer important. What I care now is the new global support, which is currently at an RSI of 22.81 on the daily. I also care about this 30.15 because that will be the perfect retest. And just for the record, I'm going to keep that 83.88, which is the global resistance. Let me show it to you on the RSI. That is if we go back again into the top of the range. I am not expecting that, but I will keep it there because some of you are very bullish for the end of the year. That is your thing, and I respect it. That target is currently 162. Since the price went down, then the target went up. It's a moving target. So the target of 30, that perfect retest, has already been tested. You can see that intraday, today we went by the dollar into 84K. That new global support is located now at 76 on the daily. And just to be completely transparent, the line was before there, but every time that we get a global reset, we move the line lower, we replace it there, and we wait for a test of that level in case we want to come back to the same level. So that is the way it's looking. At the moment on the daily, in my opinion, there hasn't been a significant damage. The damage has been taken primarily by the 4-hour time frame that has almost fully reset. Volatility on the 4-hour went all the way from the top back almost into the bottom. And yet this could spill over into the daily potentially. And remember, I am long. And I have to manage my long. I do not have a bias long at the moment. Indeed, I will prefer that we continue the puking. I will much prefer that Bitcoin now goes back into the 22, goes into 76, and that gives me a way better entry to average down my current average, which is at the moment 100K. If we started to rally and we respect this 30, we could find ourselves very quickly at 100K. At that point, people are asking me, are you just gonna dump your long if we manage to get to the break even? And the answer is always, I do not set limit targets. I do not set static targets. What I do is I set areas of interest, areas where I put alerts and I have to look into what's going on. I find explanations, whether we are rallying, if it's a fake rally. I try to read between lines, and then I make decisions on how we get there and why we get there. That has a lot of importance to take a decision. That's why people tell me, do you get there? Are you going to sell? I don't know. Are we putting a bear cross on MACD with this dump? Not yet. As you can see, we still have intact the bull cross and the mouth is pretty wide open. So that's why I sustain on the daily, despite the fact that the volatility is back at the same lows as we were in here. The momentum is still holding. In the next few hours, this could break and we might go into the mid 70s, in which case I'm gonna be pretty happy because my risk to reward will increase at that point. Call it my chances of winning. And yes, we are in a virgin month. And just so you understand, on the 15 minutes, that means that there hasn't been a touch of the price against the pivots for the month of December. Therefore, there is a good chance that at some point during this month we touch the pivots. That happens 99% of the time. What happens with the rest 1%? Sometimes a dump or a pump can be so heavy that you never test the pivots. The pivots at the moment are at 92K into 96K, and the most likely scenario is that in a matter of days or a couple of weeks we are going to be testing that. But since the past month we touched support in November, in December we should go into 77K, which is the first support, or 63.5 or 46K. I'm sorry, I cannot say that number without having a meltdown, because at 46K things are just very difficult to manage at this point. Assuming, we have a falling knife. So I'm not going to cover weekly, as I said. I didn't cover weekly this morning either. You can watch the videos from the weekend for that. I cover the end of the month primarily this morning. You should watch that definitely. And as you can see, this move down in here was not driven by liquidity. It's not that there was excessive longs that needed to be taken out of the way, even if people try to convince you out there that that's the case. Indeed, we were doing a pretty decent rally in here, and we were convincing most of the shorts to enter throughout this period, and that was a recipe for getting them liquidated and potentially to going into 100k, which is, believe it or not, something I didn't want to see myself. 100k is a level that at the moment there is a long list of indicators are flagging as the level of a potential dead cat bounce and confirmation of bear market. And since my average is at 101, I do not want to go there with that average and have to deal with deciding or flipping a coin whether I want to break even or if I want to hold it for further upside. I much rather having my break even at this point in time way lower, as many of you would. Now that since this move down in here, now we're getting much closer into liquidating the level of 77k. This move down in here is not driven by liquidity. We look that the same party of red has affected general markets, so this is not isolatedly affecting just Bitcoin. Nasdaq and the S&P started the week in the red, not by a lot, but pretty flat. So if we had a carry trade of Japan 2.0, we need to keep our eyes on number 4 and number 5 just in case, in preparation. Plan what would you do if you get there. Do not expect that is must happen. We could as well be forming a double bottom. After all, we still don't put a new low from here. Look at previous formations of new double bottoms on the daily and you're gonna see how they look. Specifically, this one is of great interest. This used to be an inverse head and shoulder and we entered beautifully with longs at that area. And Ben is talking about that from a different perspective and I'm very interested on this. In July 2024, the Fed cut rates while the BOJ raised rates, leading to the unwind of the carry trade. Bitcoin capitulated into it and found a low 1 week later. You can see this is the megaphone pattern. I call all this area that we spent 9 months there making a baby together, which was the long that we took into this area there. At that point, the Federal Reserve was cutting rates and the Bank of Japan was raising the rates, and that is a similar setup, at least from that perspective. So that's an interesting point of view. Good chance this happens again on December the 10th. Federal Reserve is due for cutting rates and Bank of Japan raising the rates. There are some rumors that maybe Jerome Powell is going to announce tonight that he's going to resign at 8 p.m. ET. There's supposed to be a speech coming in from him. Let's have a very quick look at the order book and see how it's looking tonight. There's still some resistance, but now the resistance is at 86k, followed by 87k. Below the price, we have some levels, interesting support at 78k with 1.25 in orders. The buying wall remains around the low 80s into the mid 70s. And we have very juicy fair value gap. So if we have an incentive to go to the upside, we have the potential in here to revert with a lot of speed back into 91. As you can see, there was literally not much motivation to go that low. We have a fair value gap up until 87. We noticed that on the weekend and we came in here into 83 in the middle of nowhere. There is no liquidity pools there. There's no fair value gaps there. So the only reasonable explanation is what happened to Japan and the fears of that him kicking in a similar way that it did a year ago. Well, a little bit more than a year ago in the middle of 2024. You can see in here in August in 2024 how the VIX was pumping like crazy at that point. Then we have a replica, but this one I think is to do with the trade war from Trump. And I'm expecting to get a massive replica coming in here. And since we've been at such a low levels of VIX, but with the momentum increasing, I keep expecting to eventually see an expansion, massive coming in from there. Will it be this the case? I don't know, but if it escalates and we get the similar performance as in the middle of 2024, potentially this now has a lot more upside to go. That is just a forecast based on the momentum, how it's expanding in here, and it keeps putting new higher highs. And it's kind of building a ticking bomb in here. That's just my opinion. If we go into the monthly and we look into the Nasdaq, we can see this breakdown. So that is what calls for an expansion. Still hasn't done anything, but it's got the potential to come into the 21,000 on Nasdaq. On the S&P, same thing, equal highs, breakdown, and it's kind of ready for the picture to the downside. But these are indices, and indices do whatever they want. This is not a forecast. I'm just saying that on the table, we have everything perfect to take a very similar picture than the ones that we took in the past. I'm not trying to time this, just a yellow warning if you want. US oil in here is potentially confirming a breakout on the weekly. You can see that it's a perfect breakout. Although the price action doesn't really show it, the momentum is showing it after this bullish divergence. On the monthly, it's a little bit more noisy. Just want you to know about that because many people are constantly asking me, when are you going to cover some other assets? On the monthly, the Nikkei finally broke down. We chased that breakdown for so many months and it eventually happened around that area in there. We call it when we were around early November, and it has continued to the downside. And so the opposite effect with the yields from Japan, we get an explosion to the upside, which is what you will expect because they are completely going in opposite directions, right? Today I wanted to cover as well the new all-time highs of silver. I want to do some TA on that, and I also want to do some TA on MicroStrategy. That is definitely an elephant in the room, and I want to talk about all those weird things that people are talking about. I cannot review silver without looking a little bit of what happened to gold, because in my opinion, these two guys in the technicals tend to have some echoes of Bitcoin versus Ethereum, if you allow me to do that. And since gold put a pinch of the highs in here and then it lost it, that was a signal of sideways consolidation or a bearish call. But this week we are getting the opposite. We managed to close at 4.2 and we are trading above that level. If we focus closely on that, that is already recovered more than the golden pocket. So that is a bullish signal of continuation on gold. And silver has already taken the lead in here. It managed to get to the golden pocket when it was at 50, and it has already conquered 58. So I want to give you a little bit of a heads up on silver, because silver has a liquidation level at the levels of 63. Remember, this is not a forecast. I'm giving you an alpha. You manage the alpha in a professional way. That is my expectation, but that is not my problem. I'm only informing you. I have no clue what you're going to do, and I'm not taking this trade. But there is a level intense of liquidation at 63, and I'm wondering what's going to happen after this guy gets around that level. And let's have a big picture of silver. You can see that it reached an all-time high of 47, then a similar all-time high of 48, but this time it has gone $10 beyond that level, defying the highs that we did before. When it comes to momentum, you can see that this momentum was 98. That happened in the 80s. I think I was like 2 years old. How old were you when silver was putting this all-time high? But I don't know, but it took pretty much my whole life to break that high. The funny part is that it hasn't managed yet to get close to that 98 of RSI on a monthly basis. So these crazy rallies, as you would expect, are very difficult to forecast what's going to be the high. But one thing that we can do is know when it breaks. And in that sense, gold is still very far from breaking. So my expectation is that first gold needs to break down on the monthly, the 78, then produce a retest and then come back down for a full downtrend on the month. Silver, as you can see, is the furthest away that it's been from the monthly support, 20 points of RSI away. So really, if we collapse 20 points of RSI, all we are doing is testing the monthly support, not breaking down. So there's a lot of room to get a correction and then potential continuations of that. I am not saying be careful. I am not saying this is the time to buy. But on the way back into that support, I will be very tempted to see what happens on that support, because even if we cannot manage a same high on the RSI in here, that could bring new all-time highs once again. So let's go back to Bitcoin, and what are the bearish news that are driving the price down? Top 3. The first one is the Bank of Japan rate hike signal that we covered this morning. That's a 2 out of 10, very bearish. Bitcoin plunged below 85K after the Bank of Japan hint at a potential interest rate hike for December, and that's on the 20th of December, so it's a little bit later than the 10th that is for the US. This strengthened the yen and triggered an unwind of the yen carry trade, draining global liquidity. MicroStrategy, that's the second one, which I also want to cover. Fundamental shift. In a surprise move, MicroStrategy announces a 144 billion cash reserve to pay dividends and slash its 2025 earnings forecast. Crucially, CEO Michael Saylor admit that the company might sell Bitcoin to cover these dividends if needed, breaking the never sell narrative that investors relied on. And third, Kevin Hasset emerges as Fed chair frontrunner. That's a 7 out of 10. But we got these two that are really a slap in the face. Imagine holding MicroStrategy and thinking that he's never gonna sell, and then suddenly you get to know that he might sell. Some people might prefer that he doesn't pay the dividends, but that's as bad, in my opinion, as saying that they are gonna start selling. He convinced everybody that you never sell your Bitcoin. It's kind of the brand of this thing. But anyways, I was always annoyed at Michael, because every time I hear him, he's such a weirdo, and he's constantly talking that he loves Bitcoin. In my opinion, he's just too obsessed, too maxi, and at the same time spoiling the actual nature, original of Bitcoin, which was supposed to be not based on using leverage, not based on using margin. And those are all the things that this dude is using. So literally he's running with an amplified version of Bitcoin, which is currently putting the company at risk, right? If you're talking about the market cap being larger than the amount held of Bitcoin, that's a good thing. But in this case, he's holding 55 billion, and apparently the market cap of MicroStrategy is smaller. Is actually 10 billion less than their holdings of Bitcoin. That's precisely how it's supposed to look, someone that is running with leverage. And that's something that we've been talking since the early stages of the bull market. I always refer to this as the new FTX, together with the miners and potentially Binance. That's just a bet, call it. So just a summary before I let you go, the RSI daily is really not yet calling for any drama. If we start breaking back below in here and we close the daily below 30, as I told you in the morning, then it means that the 4 hour is having such a dramatic move that is starting to spill over the negativity into the higher time frames. And at that point, we need to pay attention. Personally, I will pay attention because I will be looking for my next long. Actually, I'm crossing fingers personally for this to break. It will make my life easier and the ride a lot more enjoyable than having to keep an eye whether we go into 100 or into 96, and that's a dead cat bounce, and then I cannot close properly the long. If you want to know those targets that we identify in the morning that are below 70k, you should watch that video next. Thanks so much for watching this video. I hope you enjoyed the video. I'll see you next time. Hit the like, subscribe, write down a comment down below, and I'll see you tomorrow. Bye-bye.